So I am going to talk to you today about how to keep track of your income and expenses for taxes as a freelancer, the different types of income, the different types of expenses that you can claim, and finally how you can keep track of those for tax purposes and also for personal purposes. So the first thing that I wanted to talk to you about is all the different kinds of income that you are going to probably encounter in your working life. Because as dance professionals, you could have income coming from different streams and different types of organizations. The first way that they will pay you, which is unusual in your profession but does happen, is T4 income, which is your standard income. If any of you ever had jobs, part-time jobs, whatever, you're used to getting a T4 at the end of the year from an employer where you've got tax taken off, CPP taken off, unemployment insurance. So that's the most basic and the easiest one, because all you have to do at the end of the year is file a tax return with that information on it and you're done. Some organizations will actually provide you with information about the income you've earned with them, but they won't take off taxes. And those are T4A returns slips, and you'll get those slips at the end of the year as well. But that is part of your self-employment income. And then the last type of income that you get, of course, is just your contracts. And that you have to keep track of on your own. And I think that one way to get yourself organized and keep yourself organized throughout the year and to know what's happening is to make sure that you create invoices, whether employers or contracting companies ask you to or not. So right off the bat, as soon as you start to get work, as soon as you start to get things, get yourself used to creating some kind of nice invoice to go out. It makes you look more professional and it helps you keep track. So when you're talking about why you're keeping track of all your income and why you're keeping track of all your expenses, you have two main goals. Your first goal obviously is at the end of the year you are going to be responsible for giving all that information to the government and paying the tax on it. But the other reason, and I think to me the more important reason, is so that you understand what's going on with you, with your income, with the expenses that you have to pay, and understanding like how you're doing throughout the year. Especially since, if you're working as an employee and you get a paycheck every 2 weeks or twice a month and it's easy to budget and you know what's going on. But when you're working as a contractor, when you're picking up projects throughout the year, you may not know as you're going along how you're doing unless you personally are keeping track of everything in some way, and it can be on a spreadsheet. It can be in a ledger book. You can go out and get a nice little accounting program or one of the online ones that work really well. But in order for you to be able to budget, in order for you to be able to do any kind of planning, you've got to know what's going on all through the year, not just coming up at the end of the year, throwing a bunch of receipts into a box and handing them off to somebody and saying, okay, here, go tell me how I did for the year. Because I get a lot of people who are new clients who come in and at the end of the year are just absolutely shocked by how much they're going to have to pay in tax because they haven't been doing any kind of record keeping, so they didn't know how well they were doing. So the goal in all of this is to make sure that you know what's happening, to make sure you know what's going to happen at the end of the year, because as the years go by, you'll get a really good sense of, if I make this much, I'm going to have to pay this much tax. So as you go along, you know more and more and more, and you are better prepared for whatever is going to come along. The other reason to do all of this, of course, is as self-employed individuals, even though you'll be filing your tax returns just on a normal T1 tax return form, you do have an extra set of forms that goes in. It's called a 2125. That's going to list all your self-employment income and all your self-employment expenses. Once you start filling those out, you are much more likely to be in an audit situation with Canada Revenue Agency. Basically because that's who they tend to go after. They know that there are certain things that the self-employed do wrong, and they know that it's easy to find those kind of mistakes, so they go after them right away. So one of the reasons that you want to be really prepared, and why I'm hoping in this 45 minutes to give you a few ideas, is so that what they do at Canada Revenue Agency is they do a pre-audit first, and then if they don't find any problems, if they think everything looks pretty good, they walk away. If they find something wrong, then something they don't like, calculation errors, errors in understanding how you're supposed to keep receipts, then they dig in. So you can't avoid the pre-audit, but you can make sure that you're prepared for it and that you will never go past that stage. So we're just going to go through with how to keep the records, like what kind of expenses are legitimate, how to keep your receipts, and there's a few categories where there's very specific types of record keeping that has to be done. So we'll go through a few of those. There's only a few of them, but they're important. Okay, so the first types of expenses that you're going to keep track of are, you know, your basic ones that everyone would kind of know: your supplies, dancewear, office supplies. If you have cards, if you have a website, if you have, what else? Like accounting fees is one, legal fees, anything like that. Pretty basic ones where you're just, it's fully for the business, you get a receipt for it, you keep the receipt, you track it. So those are some of the really basic ones that you would use, and pretty straightforward and across the board for everybody. Then there are some expenses that are much more specific to artists, dancers, artistic people, artisans, things like that. So one of the expenses that a lot of people miss is professional development. So any kind of courses that you take, any kind of special training that you do, those can all be claimed on your taxes, but not gym memberships. Everybody always asks me that one. Can I claim my gym membership? But I dance. No, even dancers cannot claim things like gym memberships. So you've got that. You've also got research. Now, research is a really interesting one too. So you know, the obvious ones being books and magazines and that kind of thing. But the less obvious ones are things like going to performances. If they happen to relate to what you're doing, and they do need to relate to what you're doing, you can certainly claim those kind of things. Other ones that are more specific are things like dancewear, obviously. That kind of thing you can claim as well on your taxes. I'm trying to think if there's other ones that are specific to that. Not really. So those are the ones that are obviously more geared to you, not so much geared to the average person who just goes out and makes widgets. Oh, the other one too, yeah. The other thing that you can claim, which is probably one that, because of what you do, you will be more likely to actually have than other people, is your health insurance. So if you have any kind of private health insurance that you're getting, disability or anything like that, you can claim that on your taxes because you're getting that insurance because it's insuring what you do for a living. And then there's another group of expenses which anybody can claim, but the way that you claim them and the way that you keep track of them is really important, because they're also the kind of expenses that Canada Revenue Agency will zero in on because they can be abused so easily. So the first one that a lot of people use is their business use of home. If you are out there working as a dancer and actually working in productions, and that's all you're doing, you cannot claim your business, your home, as part of your business. The reason is that it's not where you earn the income. Even if you have a studio space, even if you practice there, even if you do rehearsals there, you can't claim it. The exception would be is if you mainly teach. So if anybody does any teaching and they're bringing students into their homes and they're teaching in their homes, then they can absolutely claim a business use of home. So if you were in that situation and you could in fact go ahead and claim business use of home, what does that mean? It means that you're allowed to take a certain percentage of the space of your home, figure out what the percentage is that you use for your business, and prorate that for all the expenses. So for example, you have a space and you use 20% of it for your business. You've got a studio space, a little office or something like that going. So you've got all that happening. You figure out that out of the square footage, it's 20%. That means that if you're renting, you're claiming on your tax return 20% of your rent, 20% of your utilities, 20% of your home insurance, and so on and so forth. If you have to fix up the space in order to make it a studio, then you can claim all those expenses as well. If you own your place, then you're talking about interest on mortgage and strata fees and property taxes and repairs. So there's lots of different things you can claim if that's a viable expense for you. But you do have to be able to prove the case that you do most of your work in your home in order to use that one. I think that the most contentious expense for Canada Revenue Agency is something called meals and entertainment. And I don't know if anybody has come across this one or not, if anybody's actually already doing their taxes as self-employed. But this is an expense that Canada Revenue Agency will immediately zero in on because lots of people don't know how that works. They say, oh, I went out with a bunch of my colleagues, we had some beers, we had some food, we managed to talk about work, what we were doing for 15 or 20 minutes. Bingo, somebody take the bill and put it on their income tax return, right? So, and lots of people do that. So that's why Canada Revenue Agency just goes nosing around those immediately, because that is actually not allowed. There are 3 situations in which you can claim meals on a tax return. The first one is if you are entertaining a potential or a current client. So I don't know what an example would that would be for you guys, but you might have a situation there, I suppose, where you're taking out somebody who has a company or something and talking about some production that you want to be in or something like that. So and you have to keep on the receipt the name of the person that you were with and the amount and the reason for the meeting. So it's client, like business, potential business, income, potential income, thinking along those lines. The second time that you could actually claim a meal is travel. Now that might be a really big one for you guys. And if you have to leave Vancouver or wherever you're living and actually be far enough away from home that you can't get back there easily, then you can claim your meals on a trip like that. And also don't forget with that one that even if you're getting per diems, keep your receipts. Because a lot of times, it just depends, if the per diem could very well be lower than what you're actually spending, you can claim the difference. So keep the receipts even with per diems. The last one is if you have staff meals. Now this happens a lot more for like visual artists that I work with where you know, they're putting up a new installation somewhere and they buy everybody some pizza, and so to help them put it up so that they can write that off in their taxes. I don't know if you guys would ever come across that situation, but if you did, then that would be the third way that you could claim meals on your taxes. So those are the only 3 situations in which you can claim meals. So the next one is that's a little bit tricky with Canada Revenue Agency is use of your vehicle. You may claim your car as a business expense, but you need to have really detailed records on how you were using the car and kilometers that were driven. So the way that Canada Revenue Agency has the calculation set up is you take your opening mileage at the beginning of a year you take the mileage at the end of the year. So that will give you your total miles driven or kilometers driven in the year. And then you have to have tracked every kilometer that you drove for business. So every time you went out, whether it's to buy supplies or to go to rehearsals or to actually go to productions or anything else like that, you have to somehow, you got to have a mileage log, you got to keep it in the car. If you're lucky enough to have like regular places that you go, you know, like if I go to rehearsals every Tuesday and Thursday at this place at this time, you can always get, like, just go on Google and get the kilometers and just multiply it out. But you do have to have that record. So once you have the number of kilometers you drove in the year, say you drove 10,000, and then you add up all the kilometers that you drove for work, say that's 5,000, you know that you can claim 50% of everything on your car. So that's 50% of, if you lease the car, that's 50% of the lease payments. If you bought the car and have a loan, interest on the loan, obviously all your gas, your car insurance, with the caveat that you have to have actual business insurance on the car. You can't have just the pleasure use. Car washes, anything to do with your car, licensing as well. So you can claim all those at the rate that you use the car for the business. And then the last one that's contentious is use of your phone. And we used to have this great way of being able to do this where if you had a landline and had a cell phone, you know, and then you could just say, well, just say the landline is for personal and claim your whole cell phone. So we don't do that anymore. And so you have to sort of figure out, like, how much do I use my phone for business and how much do I use it for personal? So the way that you do it for Canada Revenue Agency's purposes is, for 3 months, you have to keep track. You got to get your actual cell phone bills, the really detailed one with every single call on it, and you get the percentage from that. So whatever percentage of your calls, on average, over the 3 months, is the percentage you're allowed to use your cell phone for. And you can keep that for as long as you want. Like, once you've got that sort of mark to say, okay, that's the 3 months, you can keep that forever. If in fact you think that it changes, like, because I've got people who, when they're first starting out, of course, they don't use it very much and they're like at maybe 25–30%, and then they realize that they should reset that after a couple of years because now they're using it constantly and now they're up to 75% of their phone use. So you can certainly do that, reset it whenever you feel that it's absolutely necessary to do that. So those are the ones that are the most particularly contentious with CRA. If you get those ones straight and get really good record keeping and keep all your receipts, then A, you'll know what's going on with your own business, and B, you will be audit proof at the end if you ever get into a situation where Canada Revenue Agency is knocking at your door asking you questions. And as for keeping receipts, you have to note that debit checks are not receipts, and credit card statements are not receipts. And IKEA receipts are not receipts, because you have to write down on the IKEA receipt what the heck it was that you bought, because Canada Revenue Agency doesn't know what you bought at IKEA if it just says the, you know, the billy or whatever. So if you don't have those, try and get those. Equipment is another one, but you probably, aside from maybe having a computer, you probably won't have too many issues around equipment. But computers, it's sort of the same idea as things like your phone. Most people don't have a separate computer for business and a separate computer for personal. It is a subjective thing to try to figure out what percentage of your computer is business and what is personal, and it's really difficult for anyone to tell that. The only thing I would say to somebody is, if you are going to claim your computer as a business expense, I would be very conservative with the amount, because you have to remember that if you were to walk in, if you were to sit down and put down on your tax return that you use your computer 100% for your business and you were audited, that would give Canada Revenue Agency the opportunity to go in and look at your computer. Because they can do physical parts of audits as well as just asking for receipts. They can physically ask to look at your computer, they can physically ask to come in and see your business use of home. If you're going to claim it on the return, they can look at it. So if you do the 100, you kind of have given them the opportunity to come in and look at histories and favorites and browsing histories and all that kind of thing. So up to you. Most people don't really want them to be having free access into their computers. The only other thing that I wanted to bring up, and then I'll just sort of open it all up to questions if you guys have them, is GST. Lots of people have an issue around understanding how the GST works and when you have to start claiming the GST. So as soon as you know that your income in a calendar year is going to go over $30,000, you need to register for the GST. That's kind of a hard one, I realize sometimes, but you know, if you've got sort of regular work and then something really big comes along and you think, okay, put them all together, I'm going to get the 30, you should register. If you get to a point, and this happens because most people aren't keeping that close track of what's going on. If you get to the point where you've gotten to the end of a year and you're just about to file your taxes and you start adding up all your income and you realize, oh my gosh, I actually did go over 30,000 for the first time this year, you register for the GST immediately and then you file your tax return. Because what will happen is that Canada Revenue Agency will take a look at tax returns and scan them for the ones that are over the $30,000 gross, not net, gross, so it's all your business income. As soon as they see that they're over the 30,000, they go and they double check, registered for GST or not registered for GST. If they're not registered for GST, they will send you a letter asking you for 5% of what you earned in the prior year, whether you collected GST or not. So if you obviously didn't collect the GST and now you have to give them an extra 5%. You are well within your rights to go back to whoever your clients were and say, I have to pay this 5%, can you give it to me? But that's a little embarrassing and nobody really wants to do that. So if you get the GST registration before you file the tax return, then what'll happen is they see the 30,000, they go double check to see if you're registered, they go, yep, you're registered. They don't look at when. They just check it off, yes, registered, okay, move on. So if you get yourself in a situation where you've missed it, you didn't notice you were over the $30,000, then get it done. And I would also suggest too, with things like the GST, is not to sort of flip in and out of it. From my experience with all the artists that I work with, there's a lot of people who, for a long time, sort of do this with their income, where they're up and over, and then they're down below it, and they're up and over, and they'll say to me, well, should I, deregister for the GST because, now I'm not over $30,000, and I don't want to go to the effort of claiming it. And that's usually more work than it's worth. So once you've hit it, you just stick with it and stay with the GST. The other reason too that I tell people, and I don't know how much it would affect you guys, but I also tell people that there's a certain level at which, as a professional who is invoicing people, you look more professional when you charge the GST. Because if you don't charge GST, you just told them how much you don't make. And they don't want to know that. So that sometimes is a good idea to do that anyway. So that's actually a 3-hour seminar in probably 1/2 of an hour. So I thought what I'd do is just see if anybody has any sort of individual questions, things that have come up with them before in the past that they had issues with, or things that are coming up now that they're not really sure of, and I can just answer questions and they'll probably relate to everybody. Okay, yes?
Can we claim bus tickets and stuff? Or like bus passes?
Bus passes, anybody can.
Yeah. Okay.
Yeah, and the bus tickets, no, they have to have more information on them than just the bus ticket. And yeah, I mean, anybody can. You probably would get, you'd probably get a better tax credit if you put it on your business expenses than you just claim it on, like, where, because everybody can claim it on Schedule 1, the bus pass, the transit pass, but you're better off claiming it in your business if they are for business. Again, you'd have to prove they're for business. Yeah. Anybody else have a question?
I have a question.
Sure, go ahead.
Any expenses that are particular to dancers, like that might not be a relevant business expense in other fields, costumes?
Well, that's what I was saying, like dance wear, yeah, professional development and research are, although they're kind of used for other ones, they're really specific more to artists. And like I said, for dancers, dance wear, yes. Costumes, do y'all have to get your own, like, do you guys have to get your own costumes a lot of the time? Yeah? Okay. I would try to stay away from things like just, what I'll get a lot of the time with actors and dancers are things like haircuts. Not so much, but if you actually had to go and have your hair professionally done for a performance, absolutely. If you had to have makeup done for a performance and had to pay for it yourself, absolutely. And obviously all the things like the headshots and all that kind of stuff are straightforward. Again, if you were in a situation where you had to go and get your hair done or get your makeup done, make a note on the receipt why. Because someone from Canada Revenue Agency, one of the things that is the most frustrating dealing with them and dealing with artists is that they don't understand what you do and they don't understand what you have to do in order to earn your living. You're not just, you know, being a consultant or selling widgets, the things that they understand. So the more you can be clear on why you're claiming an expense, the easier it is for you. So if you had to go in and get your hair done for a performance, name of the performance, date of the performance, right on there in the receipt. Yeah.
Would you be able to claim like equipment such as set or like things that you might need to rent for a performance?
Oh, absolutely.
Yeah.
Yeah. So if you're doing anything, like, so you're talking about more a situation where you're putting on the performance as well as, like, you're producing it as well as performing in it. Oh yeah, absolutely. Of course. Anything, like if you're actually producing it, any of the expenses to go along with it. Yeah. Yeah.
Is there any special requirement when you have to get your costumes from other country? Like, because I have to pay like the shipping and then the tax when you get, is there like any special requirement that I have to like apply for? Or?
No, not at all. If you have to pay shipping and customs and duty and all that kind of stuff because you're bringing in costumes, absolutely, claim it all. No, and you don't have to do anything special with that. Yeah.
I'm sorry if this is a silly question, but
probably not.
When you're claiming things, do you have to claim it? I know for certain things have a particular deadline, but before you spend that money, or after, or when is it too late to claim something? If that makes any sense.
It's only too late to claim an expense when it's past the calendar year. So one thing that I'll come across with a lot of people who are in the arts is they'll come to me and they'll say, and this is like a lot of times, especially with people who deal with visual art, so they've sort of been building up some work, and they haven't really gone out and they haven't had any sales yet. And they'll sort of come to me as soon as they have a sale. They say, oh yeah, I've been working on this for 3 or 4 years. I've got a studio, and I've got this, and I've got that, and I'm doing all this stuff. But I didn't have any sales, so I didn't claim it on my taxes. And so that's wrong. You can only claim them in the year where you incurred them. So if you have the expense in 2016, you claim the expense in 2016. As soon as you are sort of out there in the world trying to get work, if you're going to auditions or if you're putting together, you know, if you're right now working on something that you're producing something that's going to be actually mounted in 2017, but you're doing the work now, you're now self-employed. So you should be claiming everything. So claim it in the year that you have the expense. You don't have to have income to match it. So the way that it works is that when you do this form, the 2125, and you claim all your income and you claim all your expenses, it asks right on it, what do you do? What is your main product or service? And as soon as you put, I think it's 711512, independent artist, they know exactly what your situation is, and they're not necessarily expecting, you know, they're not expecting to see the typical business sort of revenue and expense projections that one would see again in the widget selling business. So, you know, starts off with low sales and moves its way nicely up a graph of up and up and up and up until they're making more and more money, or until they just stop. What they end up seeing with independent artists is a lot of this, up and down, years of zero income, years of big income, like people who get like Canada Council grants. You know, we were just sort of talking about that Canada Council used to be really bad because they would give you a 3-year grant in November, and then you have 3 years to spend it, but you have to claim it in when they give you the grant. So I've got clients who are getting this, you know, $50,000 grant in November of, say, 2015. It's going to take them 3 years to spend all the money, but they had to claim the whole thing in the year that they received the grant. So they're quite used to fluctuations, and, you know, the patterns aren't the same, and things like that. So having to take a couple of years of build-up is not going to be a big deal. And if you have a few years with negative income or no income, that's not a big deal. What they won't let you do is, in like 2016, claim every expense you've had from 2013 on, because now you have some income to put against it. They will actually disallow them, and you'll have to go back and do all the old years again. Yep.
This might be kind of silly as well. When do you start claiming as a self-employed person, self-employed artist?
I would say that once you start to have some expenses towards it,
Okay.
and once you're actually sort of putting yourself out there. All right.
If you had to move somewhere, say for a contract, would you be able to claim moving expenses?
Yeah, anybody can though. So I don't know if anybody heard that, but moving expenses. So if you move, and this is true of anybody, if you move more than 40 kilometers for work or for school, you can claim your moving expenses on your taxes. Any other questions?
I guess I'm curious to know, in terms of someone who's on staff at a company, 9 to 5, Monday to Friday, they just get their tiny little T4, which says what their income amount was for that one job. Dancers go contract to contract, and it's so diverse. So, you know, you guys talked to Kata today at lunch. They're really good at teaching you and coaching you about how to negotiate a professional contract as you start to do that. But the other piece is, you know, what kind of paperwork do you need to have prepared along the way in order to be ready to talk to a tax professional or do it yourself?
Well, I think you just have to have, I mean, you always have a copy of the contracts, right? You should have copies of the contracts, right? So you would have, that's what I'm saying, like, you know, you've got sort of those 3 levels. You've got the companies at one level, and I don't know whether the big companies actually do bring people on staff. Do they now? Like, these, they never used to. They used to have everybody, like even like Ballet BC and all that would just have contractors.
There's a lot of contracting.
There's still a lot of contracting going on?
Yeah.
Well, there was like about 10 or 15 years ago, there was a huge kerfuffle because the Winnipeg Ballet everybody got audited at Winnipeg Ballet. And so they were all, at the time, contractors, and Canada Revenue Agency came along and made them all employees of that ballet. So I don't know how, they probably all treat it differently. The people employing you want to make it as simple for themselves as they possibly can. And the simplest way to do it, even if you are, you know, a member of a company that you're with for like 6 months or 8 months or 10 years, the very easiest way to do that for them is just to make them contractors. because they don't have to worry about benefits, and they don't have to worry about county pension plan, or EI, or anything like that. So they're not paying anything, they don't have to worry about, you know, labor laws and how often you have to work and how many hours and all that kind of thing. So there are, most of them will try to fight to keep it at that level. If they have to keep you as an employee, again, you're gonna get that T4. If they're going to, but if it's just off of a contract, it's completely up to you to keep track of that in some way. And yes, some people do bring me contracts. So, because a lot of times, it'll be such a mix. That's the thing. That's what I'm trying to get across, is it's not like it's gonna be some nice, easy, neat, I had a job all year, I got my T4 at the end of the year, I filed with e-file, I'm done. It's always going to be this messy, here's some T4As that people gave me, but I also have the contract from them, so am I double entering that? So it really is, on the income side, up to you guys to make sure that you've got something going all year long that will keep all that really well organized for you, whether it's spreadsheets or whatever, so that at the end of the year you can easily match, okay, here's my T4A, here's the ones that I got contract no T4A, here's the, you know, small things that I did where I just invoiced a small company and did, you know, did maybe like a one-off, like a, you know, a couple of nights or something like that, so that you've got it all completely organized for yourself, and it's going along like that for the whole year, not trying to sit there at the end of the year. Because I'll get that from clients where they'll say, here's my stack of contracts, here's some T4s, and I'll be like, well, are the T4s part of the contracts? Well, I don't know. And if you work with unions, do you guys, I don't know if you guys work like, if you work through unions, I'm assuming if there was any situation like, actors do it, right? They work for like EP, so EP is actually doing something for them, and sometimes it's a T4, but sometimes they just don't, depending on the production. So I will get like 5 contracts. 3 of them have had T4s, 2 of them haven't had T4As, and we're just going to go with what's going on. So you got to get, the only solution is to keep track of it as you're going along, so you're clear when you're entering it, because it just happened. If you try to do it at the end of the year and pull everything out, you're going to forget. And one interesting thing is if you ever get, hopefully we'll never get past the pre-audit, but if you ever got to the audit stage and Canada Revenue Agency wasn't particularly confident that you had been showing that you had all of your income on your tax return, they ask you to pull all your bank statements for the year, and they show every penny that comes in, well, that's your income. And then they'll just ask you to pay tax on that, which is kind of, you know, which is fine, but if, you know, if your parents lent you some money or you got a gift or something like that, you got to try and go back and explain to them, no, that $1,000, that was a gift, right? So it can get a little bit complicated. So the more you have all of this straight as you're going along, easier for you, more audit proof for you. But they're just going to always try to make it more complicated. So. Any other questions?
Yeah. What happens when you have, let's say, like a normal job, but I mean you are getting money there, and you are also an artist, and sometimes maybe you don't have, or you are not getting like the money that you need as an artist, and you have to kind of borrow your own money to buy costumes, for example. So how do you have to do like 2 kind of taxes, like, or
no, not at all. It's just different schedules on the same tax return. So the way that it works is when you do the 21-25 return, that basically just says here's my gross income, here are all my expenses, here's the net, and that can be a negative, right? That's, some years it's just going to be a negative number. That flips on to the first page or the second page of your tax return and gets either added to or deducted from your T4 income. So yeah, you can absolutely be, and so many people are, having to do the, you know, Monday to Friday thing to try to earn some money while their career is developing. Perfectly fine doing both at once.
So you could still claim as a self-employed dancer, even if you are working like a serving job and you're getting a T4? Like that? Okay.
Yes, no, absolutely. You'll definitely have that.
Okay, cool.
Yeah. at the beginning career, I mean, I'd be amazed if somebody wasn't having to do both at the same time.
I just wasn't sure if you would have to just be a regular, like claim as like a regular person instead of self-employed.
Nope, you can claim self-employed if you have employment income. Yes, absolutely. Any other questions? Anybody else have something?
As an income tax professional, you mentioned some of the things that are challenging when people come to you with a certain kind of setup. Is there something that you love when people have certain things organized or laid out?
You know what, I would say that, and I'm a little bit different. You will find that there's some people you will go to who will literally hand you the template for how exactly they want you to show your information. And I have templates when clients ask me for them, like give me something to just get me started, and it's just a spreadsheet, but it's got all the kind of expenses that many artists would use. The reason that I don't ask people to do it one way or another, I think it has developed from working with so many artists that I would much prefer people do something than not do a thing because they don't like doing it. So I can say, the best way to do it, sure, I would love it. Everybody go out and get like Wave or FreshBooks or something like that. Get all your information into these two programs and just email me with your password, and then I'm just going to go in and get the information out that I want. That would be lovely. And that's a great way of doing things. It keeps you current on what's going on with your business. You can, if you've got a program like that, you're working like 15 minutes at the end of every month and you know what's happening. It's fabulous. But what will happen is I'll have people come back to me at the end of the year and say, I just didn't like working with it, so I never did it. And it was the system, not what they were doing. So what I try and do with clients is find what system will work for them. So I have so a lot of the visual artists that we work with literally have to bring a book in front of me. And they literally have to, here, physical, here's my thing that I did for the year. And they'll do it. They'll keep it up, they'll have it going, and it's perfect. And then there's other people who use spreadsheets, and there's other people who use software. So I think that more important than what, if you're going to go to an accountant, what your accountant wants is, what are you going to do? What's going to be the method that's going to keep you going back to it on a regular basis and keeping track of it? Does that make sense? Yeah.
So what are some of the software that you could use, or do you feel like that is a wise choice?
I like, there's a couple that aren't too bad, especially if you're just, if you're starting off and they're online, they're cloud-based, they're really pretty simple to use. Wave is pretty good. Wave accounting, because it's expandable, so if you did get bigger, it kind of expands with you. FreshBooks isn't too bad. And then you could get into, if you wanted to, you could get into sort of those higher end ones with a lot more functionality, like QuickBooks Online. They're a little bit more complicated, which means possibly more intimidating. I find with the things like Wave and FreshBooks, they're pretty friendly looking and happy programs that I think are probably, from the artists that I've worked with that use them, they find them pretty inviting to use. So I would start with something like that. Anything else? Yeah.
Can you play music that you buy for teaching purposes?
Yes. Yeah, that's a supply, absolutely. Yeah. And in any form that you have to buy it. Yeah. Download, iTunes, things like that. Again, with things like those kind of things, it's always about making sure that you could explain it to somebody sitting across from you. If you were audited. So, if you're downloading music from iTunes, well, why not if it's business-based? If you had to do it for your work, of course you're going to claim it. But just make sure that you don't sort of put all of your downloads. Like, just because I can claim downloads doesn't mean everything gets on there, because then you're trying to explain why you downloaded this or the other thing. And same thing with your research, like it's fine to go to productions and things like that, but you've got to be able to prove it. People who work in film can certainly claim going to films, but if their whole pile of receipts is just this year's, Oscar nominees or blockbusters, they're gonna they're going to start to encounter resistance. And you know, when you're talking about this, the possibility again of getting audited, you want to have everything you show them, give them more and more confidence that you know what you're doing and that you understand the rules. If every time they're coming across things and they're having to ask and they're having to get explanations, it might be perfectly legitimate, and if you can't explain it, well, great. But if they start to get that sense that, oh, you know, you just seem to be throwing everything in there, like with the meals and entertainment, then they just start to dig harder and make it more difficult for you, and you don't want that. Yeah, but
airplane to go to audition and don't get in. Still, is it?
If you
like, you know, when you go to audition to somewhere to get in, like some company or project, but you didn't get it, and at the end you didn't. Is that possible to claim or not?
What would you be claiming?
I don't know, just travel.
Sure.
The travel?
Yeah, travel time? Absolutely. No, they don't know. They do not expect you to actually, like it gets the same thing with the meals and entertainment. Potential, not guaranteed. So if it was a potential, if it's an audition, if it's an interview, if you had to do an audition and you had to go out and get a costume for it or do special makeup for it or whatever, it doesn't matter that you didn't get it.
And just asking about airplane ticket. Would they, like a flight, really? Oh. Okay.
Yeah, the only caveat to that, and this may not apply, is if you were to, obviously any of your travel, if you have to travel and it's not being picked up by anybody else, of course you can claim it. The only caveat to that would be if you are going to mix the business and a pleasure trip at the same time. So if you get an opportunity to be in a production or go to an audition in, say, New York, and you decide you want to tack 4 days on the end of it to do some sightseeing, prorate it. You know, so it's like 3 days of work and 4 days of personal, so I'll just do my percentage that way. And that's absolutely fine.
And that would include like hotels and meals because
that
you're traveling.
Includes your hotels, that includes your meals, that includes your cabs, yeah, anything like that. Even if you're doing something like Airbnb and you had to buy groceries, you can claim the groceries and the Airbnb.
One more quick question, and only because I want to respect your time.
And, well, yes, and our next presenter too. So, yeah. Anything else? Okay.
Okay.
Well, I hope that helped, guys, and I hope that you gave you some confidence going forward on this part of the journey anyway.
Thank you. I want to thank Mariana so much. This is the first time we had her out, and it was so perfect. I was so impressed by workshops that you've done in the past, and the fact that she's the president of a whole team of accountants, and they have really great experience, all of them, with working with artists and arts organizations. And I felt like you were very clear and relatable and relevant for us. And I know that this topic can be a little bit, for some of us, we get feeling a little overwhelmed, right?
No, everybody stayed awake. That was so cool. Because I was saying that the last time I did one of these for dancers, and it was a really weird situation. They were at I don't know what school it was. It was up in sort of like 14th Avenue or something like that. Anyway. Lost the space that we were supposed to be teaching it in, which had tables and chairs and the whole bit. Had to go into this little studio space. The temperature was about, I'm going to give it 4 or 5 more degrees higher than this space. Carpeted, no chairs, and all the students had just had like a 3-hour and then another 3-hour full rehearsal sessions before me. So all I had, and they were kids too, right? Like these were like 15, 16-year-olds. They're all lying on the floor on their backpacks. Well, you can imagine how long they lasted. So thank you for staying with me.
Thank you.
Okay, no problem.